Okay, here's the third page of our budget project. So again, we should have all of our information sheet figured out with our car, our college, any secondary or graduate college, apartment name, starting salary, occupation. Make sure that we calculated the student loan payment for both if you had two, and also your car payment as well. Those videos are on YouTube as well on my channel, and you'll find the links to those on Classroom. Last time we did the expenses, so these were all the expenses. Remember, we're working on a monthly budget, so this is what it's going to cost me to run my monthly budget. Again, there's a video online and I posted on Classroom. If you have any questions about that, there's a bunch of calculations that we did, so make sure you check that out. Today we are going to focus on our income sheet. So we spend enough money each month. We also make money. We have good jobs. So we are going to first work out, and this A column, you're just going to copy it just as I have it. And we're going to start out with our gross annual salary, which we can pick up off of our information sheet. My entry-level annual salary is $40,000, so I'm going to copy that number. I'm going to bring it over to my income sheet. So I make $40,000, right? Gross, meaning before taxes, before any sort of deductions whatsoever. I would never see $40,000, but that is the contract that my employer has agreed to pay me before taxes and so on and so forth. All those other things, we call all those things deductions. So the first thing that we are going to calculate, the number one thing, is federal taxes. We don't have a choice about federal taxes. Everybody gets to pay federal taxes. So if we go over onto Classroom, I put a federal income tax calculator, and you can just click on that calculator. It's going to open up. It's an okay calculator. It's not too difficult to understand. It has for 2016. It's okay that the federal tax rates for 2017 are very, very similar to 2016. And this is what we have what's called the progressive tax model. So inevitably, the more money that you make, the higher taxes that it takes. So the more you make, the more the government takes, and that's just the way it is. So progressive meaning as the amount of money increases that you make, you get taxed more. So as a single person, your first $9,275 that you make is taxed at 10%. That doesn't matter if you're a doctor or a teacher or a physical therapist. Everybody's first $9,275 is taxed at 10%. For every dollar you make between $92.75 and $37.650, that's taxed in the 15% tax bracket. $37,000 to $91,000 is taxed in the 25% tax bracket. That's kind of the middle class tax bracket right there. A lot of people fall into that 25% tax bracket, and then you guys can see you got Tom Brady over here in the 39.6% tax bracket, so on and so forth. So that's what that is. All right. Now, if we come over here, there's really only two boxes that we need to make sure we check. Filing status is going to be single. Remember, we're 23 years old, just graduated from college, we got this job, and we're going to put in our income. So wages, salaries, tips, and mine is $40,000 gross annual salary. I don't have spouse, nothing like that. Oh, I can close this up. And it is going to automatically go ahead and tell me that I'm going to pay $4,591 in federal income tax. So this is my gross, and this will be my net. We'll have some more tax deductions, but for right now, the government's going to take $4,591 right away, so I'll never see that money. It's down to $33,700 already. So we'll put this $4,591 into my sheet. 45.91. Okay, so that money's gone. I'll go ahead and center this up. I should make them all currency. They are. All right, state tax amount. Some states have state taxes, other states don't. We are so fortunate to live in Kansas to where they actually do have state taxes. So other states don't have state taxes. Think of Texas doesn't have a state income tax, I should say. Florida doesn't have a state income tax. There's a number of states that don't have it. They make up for that money in other ways. Sometimes it's higher property taxes. Sometimes it's a higher retail tax, whatever. I mean, they get their money. The state of Kansas just charges a state income tax, and that state income tax is at 4.8%. So again, when we multiply by percentages, we're going to move that decimal 2 places. So we will start out with, we will hit equals B1, which is our gross annual salary, and we will multiply that by 0.048, and that is going to calculate that I will pay to the state of Kansas for state income tax $1,920. Too many decimals on there. Too many decimals on there. All right. Then we're going to basically do the same thing for FICA. So FICA is, we'll just call it and lump it all in with Social Security, and that's at 6.2%. We'll be talking a little bit about Social Security a little bit later, probably the next class period, probably on Friday. We'll take a look at Social Security and some Roth IRAs and some 401ks and those type of things. But for right now, Social Security is 6.2%. So for any business owners, when you pay your employees have to pay 6.2%, but also the employer that pays out, they have to pay a 6.2% as well. So about 12.4% goes into this Social Security. It's a lot of money. Again, we'll talk about it later, but we're going to factor this out at, and there's a couple other things like Medicare and stuff that goes into this FICA as well. Social Security is kind of the most common thing that people relate it with. So we will multiply it by 0.062, and $2,480 goes towards FICA. All right, so our net annual salary, gross annual salary is before deductions, pay before deductions. Net annual salary is pay after deductions, or salary minus deductions. So we will again take B1, we'll subtract out federal taxes, we'll subtract out state taxes, and we'll subtract out FICA. And from our $40,000, or from my $40,000, taxes take about $9,000 out of that, which is fairly close to 25%, just below 25%. Again, if you make more than that, they're going to take more taxes. Remember the progressive tax model, the more you make, the more they take. So my net annual salary is $31,009, right? The money's going away pretty quick. We are also figuring, like we did on the expenses sheet, we're figuring a monthly budget. So this is our annuals for 12 months, that's for a year. So we are going to take our net annual salary, my $31,009, and we are going to divide it by 12 to come up with our net monthly income, right? So this is how much money I am going to make every single month. This is what I'm really going to bring home. Again, I would love to have the $40,000. I wish I just got a check for $40,000, didn't have to pay any taxes. It's just not the way it works. So we'll have net monthly income. So I'm really interested in this number, but we're going to do a couple things first. As you can already see, I'm in kind of a precarious situation because my net monthly income of $25.84 does not cover my net expenses of $28.58. I'm in a pretty tight spot already, but things are just kind of starting. So here we go. From our net monthly income, we will talk about tithing. So tithing is what we give to the church, give it up for God and everything that He does in our lives to support all those things that the great programs that the church runs, and so that they can operate a budget, so on and so forth. And tithing is at 10%. So we will put our net monthly income. We will multiply it by 0.1. We move the decimal 2 times. It's $258.41. Savings, this is going to be, and all these are mandatory. We have tithing, savings, and retirement. They're all mandatory, but savings is going to be for anything that comes up. And trust me, things come up. I have already been to the doctor's office with my kids 3 times in the last 2 weeks, right? That was over $300, not to mention another $200 at the pharmacy, so on and so forth. Yeah, that it's been like $500 just being sick over the last 2 weeks. So things happen. You could get a speeding ticket. You could get in a car accident and have to pay a deductible. You could jump off of a trailer and get a piece of wood stuck in your leg and have to go to the hospital and pay an ER visit, whatever that may be. So we're going to set money aside for savings so that our budget isn't completely trashed if one thing goes wrong. All right, so savings is going to be at 10% as well, so we'll factor that exactly the same way, or you can just type in that number. I like to do the formulas just in case I change these numbers, right? All these have formulas in them for the most part, besides the federal tax amount, so if I change the gross annual salary, then a lot of the other information is going to change as well. Retirement, so that we can retire at some point, we're going to put 10% aside for retirement, and I'll show you guys next class. We'll be millionaires. You'll really appreciate me for this one. We'll set 10% aside, starting at 23. Time is more valuable than the amount of money you put down. So even $258.41, that is going to be a huge number when we retire at the age of 65. All right. So now we're total monthly take home. This is a scary number. We have our net monthly income. We subtract out tithing. We subtract out savings. We subtract out retirement, and boom, I now bring home $1,808. We'll make sure that those are both bolded right there. This puts me in, like I said, this puts me in a bad spot. As I bring home now $1,808.86, I am spending $2,858.03. So that leaves me with a budget deficit. All right. Check out the next video for fixing a budget, and that is our income sheet for right now. So get your income sheet all figured out. Again, link to the federal tax amount is on Classroom. Get that going. Double check all your numbers. You can cross-reference them against mine. If you make $80,000, then you should be paying probably almost twice as much in federal taxes as me. Maybe not quite as much, but make sure your numbers are correct. I'll be able to look at them, and we want those numbers to be as accurate as possible. Okay? Thanks, guys. Good luck.